Hello, everybody. How we doing today? Good, good. I'm doing great, man. Doing great. A little tired today. Was a rough day with very little sleep. I got back into hard coding now, so I'm spending 4 hour, 5 hours at a time just going hard coding stuff. And then I got a lot of stuff coming for you guys, so hopefully we'll all end up pretty great. All right. You guys joining in last second, but others would call it perfect timing. So, welcome everyone. We'll get right into today. And after the day, I just want to start by saying, right, after yesterday, we didn't expect much, right? After a large range day, you expect a small range day. That is just how it is. When you are so far above expansion, you expect the next day to consolidate and form some sort of swing most times, but mostly just after a big range day, you expect a small range day. If we dive down just to the 4 hour very quickly, because that's what I was looking at the market open, right? We can tell just by comparing the candles and where they are relative to the high that was put up, right? And we're not talking about swing points, we're not talking about anything specific here. Just they put up a high temporarily, and we can see that Nasdaq was ES was falling lower very aggressively while Nasdaq was going higher right up until the 6 a.m. session, which is the I like to call it overnight trading, because to me overnight trading is after London and before New York Open. So that range from 5 a.m. to 9:30 a.m., or more specifically, well, 8 a.m. for New York, basically I like to call this overnight. So if you ever hear me refer to overnight trading, that's what I'm talking about. So we had, before that overnight trading, we were very uncorrelated. Then that 6 a.m. candle happened. And as we can see, we had a down close on NQ while ES had an up close. Basically, I'm pointing out all of this stuff, and also something I need to point out, we had lower time frame SMT right here. I believe we had 15-minute or hourly SMT, which was from this candle, if I'm not mistaken. Let's see the hover. Yeah, it was. So we went higher here on NASDAQ, while ES, well, as we can see, went lower. So we had a lot of divergence stuck in a type range. Another way of calling that would simply be consolidation. And as I said, I'm restating the obvious here, but it was to be expected. We were expecting consolidation because the previous day, well, at least should have been, because the previous day had an abnormally large range with no retracement. So you would anticipate that today would retrace. And where would we retrace more specifically? Well, I mean, we just left a huge fair value gap. We formed that on the 4 hour. We also, now that we've closed the daily candle, we formed that on the daily as well. So we would anticipate some form of retracement into the previous day's range. And some people have specific levels. I don't like that. I just like waiting for my daily power of three to show me where we're going. And anytime I'm looking at daily power of three, I like to look at a 15-minute chart, right? Intraday chart. Everything that I say always lines up, guys. So when I'm talking about intraday, always 15-minute chart. What we can see from our intraday is huge divergence, right? And if we look at the lows from the Asian session right here all the way to London, we can see that there is a lot of divergence, with first Nasdaq going higher, right, and forming divergence here, indicating that this was a possible low of day during London. But we'll dive deeper into it and see that there was actually SMT on the highs as well. Let me just find it. I remember seeing SMT on the highs. Well, right here. Basically, even during London, ES was going lower while NASDAQ was going higher. So just, again, pointing out the same things as we were pointing out about yesterday's New York Open. There's SMTs on both sides of the range. It is an unclear market. The objective is unclear. So what do? You wait for everything to become clear. And for me, I didn't like seeing this SMT at the lows. And that goes back to a 4 hour chart. And let me just remove the drawings here. I wanted to see NASDAQ taking out this low. And yes, of course, right now it's just hindsight. I really should have posted something somewhere so that you guys could see that. but I wanted to see Nasdaq take out this specific low that we formed very quickly because, well, just to give you guys the explanation, I guess, we retrace into this gap, institutional order flow entry drill. We barely retraced into it. We're very rushed to go away, but we didn't reach any objectives, right? Even on ES at this point, we hadn't yet reached the objective. So what does that tell you? Well, very simple. This was not rebalanced. So I wanted to see us rebalance this inefficiency to support the idea of higher prices, basically a continuation towards these now equal highs, right? That was my bias for the day. I wanted to see lower to go higher. That's simple. And I was looking at daily power of 3 to give me an idea on that. Now, if we look, this little dotted line right here is my daily power of 3, right? This is my raid on ES, happened during London, and my raid on NASDAQ, which is the 4-hour liquidity we were looking at, retracement into the gap, happened during New York on NASDAQ, which also, again, formed a huge SMT, basically, at these levels. But the main thing I was concentrated on is, well, first of all, to just give you guys, we had no intraday frameworks, all right? So no previous PM up until later, which we will dive into. But at New York Open, no previous PM, you had no London, and that's all you're looking for unless you're utilizing the opening range gap. And we did rebalance it at the open, but I won't dive into that because what I want to concentrate on, and I've been rambling around for the last 2-3 minutes, is daily power of 3. This daily power of 3, if we forget about what happened after this line, I'll put a separation up right here, and we'll notice that this power of 3 does not support higher prices. Why? Because I don't have a low of day candidate. And for me, that specific term, which I don't know if it's been heard before, but whatever, it's nothing new, right? It's just for me to consider something to be a possible low/high of day when I'm trading. I want to be looking at SMT in a key area, so a key level with SMT. If not, I will never consider it a possible high or low of day. Now, what could I possibly consider high or low of day? Well, the SMT formed on the news, right? We had retail sales today, I believe it was. I'm going to be honest, whatever the news, it doesn't really affect me unless it's one of the big three. But we had retail sales with the Judas higher forming with SMT as well, if I'm not mistaken. I guess I am, unless, no, exactly. All right, so we did take out these highs. I'm going to mark it out correctly so you guys don't get confused with all the multicoloring going on right now. But we had SMT form at this news. And yes, we further broke it. But I want to point out this. This power of 3 only supports lower prices. Give me a second, guys. I'm just going to go drink some water. Hey, sorry guys. So, as I was saying, I was looking at daily power of 3 and framing this as a possible high of day at this point, anticipating lower prices, again, all the way to our objective, which is all based on a higher time frame expansion or higher time frame movement. So I was anticipating lower prices at this point. And on New York Open, we had SMT to confirm that idea, right? And now I'm looking at 930. And yes, a lot of drawing, I understand. We will dive into a 1-minute chart in a second and it will all become a little clearer. But if we concentrate on New York Open, you'll see we had SMT for NASDAQ. That was a retracement into our premium inefficiency, which at this point, our range looked like this. This is not premium, but look at this wick, right? I don't want to be utilizing this specific range when I'm looking at this little move, this specific little move. So I was looking at, actually, if we go down to a 1 minute very quickly, we see this fair value gap. I was looking at our range utilizing the bodies of the candle with the 930 lows. So as you can see, we retraced to equilibrium into a premium with our premium array, and then started going lower very slowly, of course. As you can see, we had a lot of consolidation along the way. I was talking about this with a student this morning, but the specific setup that I saw for today going short, right? Following this idea that this is our objective right here lower, our 4-hour swing low, our 4-hour external range liquidity. I do want to return to this so you guys can have a quick notice this specific objective. So I am just going to call it 4-hour ERL, sorry, external range liquidity right here. And if we go back to our 1-minute chart and we look at our specific open, I'm going to remove the sessions because it's starting to piss me off that there are so many colors everywhere. But retracement into a discount of our range, into our premium 15-minute fair value gap. That is my framework. That is my understanding that, hey, New York open 9:30, chew to swing higher. I understand. I see it. Perfect. But there's still SMT on both ways. That's just the one thing that we notice. See, right here on the result of that trade, wait, I am going to put it up correctly. It would be the entry on the inverted fair value gap here based on this specific breaker block, right? So I have my breaker right here formed through within basically the 930 Judas, manipulation higher, taking out this range, and then displacement through the low. You would have taken a retracement into this fair value gap, but it did not. It did offer you this inverted fair value gap right here. You would have your stop at 3 PD arrays. What is that? Well, inverted fair value gap, order block. So since your stop loss would be at this level, you would not have gotten stopped through this consolidation, and you would have had, what is that? That is 1.71 R to your 4-hour ERL, and there were further objectives along the way. Just looking at a 4-hour, I would utilize the specific quarters right here to understand where it will go. And you also had, let me go back to the 1 minute. You could also utilize, the standard deviations, more specifically from our manipulation leg of the news. You'll see it here in a second. Let me make them a tiny bit bigger for you guys. Right here, this is our news. These are our standard deviations, as you can see, going lower into our reversal range all the way. But you could utilize those to have clear objectives further down. Now that we've seen this setup, pretty much, what we notice is that we've consolidated a lot within and didn't really get to the move until when? 10:30. We talked about this a lot, and yes, you can say here, but you had no entry possibilities here based on my model, so I'm not going to visit this. I'm going to visit the continuation after 10:30 because we talked about it yesterday. The same thing happened on correlated markets right here. Just compare NASDAQ and ES at these levels. We're going slightly down. Right here, we're going up while the other is going up as well. Here going down. That's not too bad. Now we start going up. SMT formed here. Now we break the SMT, basically uncorrelated markets. So when you see that, you want to stay away. That's the beginner thing to do. That is the conservative approach. You do not have to stay away, but it is easier, and more specifically on your mental, it will be a lot easier if you just decide to stay away from these types of trade, because you could have just waited up until here and had a beautiful entry as well. Now this breaker is a little harder to spot because this is our manipulation higher, but it then reversed all the way. So basically the range I'm analyzing is this. I see a manipulation higher, taking out the top of my range, and then it took it out lower, and you had a possible entry here, but your objective was already met. So even then, unless you anticipated the breaker and entered on this candle when we inverted this specific fair value gap, you didn't have much of an entry. So just to get back over what I talked about yesterday, if you want to learn more about the continuation entries of my model, it's all in the YouTube video from yesterday. But basically you have your unicorn right here, which we left our gap open. We had a breakaway gap for our unicorn. So you would wait for it to retrace into it. Continuation entry would need a change in the state of delivery. That can be seen through a turtle soup. So just entering on the open of the next candle. But what I prefer to use are inverted fair value gaps as confirmation. Now, clearly we can tell that we disrespected it, but at this point you did not know that, so it is still your entry PD array. That's why we have a stop loss rule that allows for the invalidation of 3 on-side PD arrays. So again, 2 days in a row, a continuation entry rather than a clean straight off the bat power of 3 setup, but it still allowed for more. And now here my stop would be at the invalidation point, which is we swept liquidity into my inefficiency. This is all balanced. I do not need to revisit this. If we are revisiting this, we have higher objectives. And my other higher objective is this liquidity, and I don't want my stop far above this specific level. Oh, I don't want to move this. I just wanted it to make it smaller. So you did have a possible continuation entry at this level. These aren't the easiest to spot. For me, they come second nature because, well, first of all, I made this model, but I've also spent hundreds of hours backtesting, and no, that is not exaggeration. So if you want to get to that level where you only see the markets through the eyes of your specific model, that's what you have to do, right? And now I see only continuation entries. And right here, I saw the retracement into this leg, which is in a higher time frame order block. This is my breaker block. I know this is set up. Breakaway gaps, a trap, turtle soup. You know, I'm going quickly here on purpose, guys. There's a lot to go over at this specific level, but at the end of the day, it all comes down to what you want to be trading. And this is not the highest probability trades. That specific trade came later, and later is after we met our objective. As you can see right here from the 1, the 0.5, and if I zoom out, you'll see 0.5. Those are the quarters from my 4-hour fair value gap. So you took out external range liquidity into my 4-hour fair value gap. Are we bullish in our higher time frame? Well, based on my weekly outlook, I said that we were going to expect higher prices until proven otherwise, right? That is all-time high conditions. We were going to spool higher. Okay, so I'm looking for longs. I am now inside of a bullish inefficiency, and we have just taken out important liquidity, higher time frame liquidity. Well, that is somewhere where a high probability framework could form, right? And as we say that, we can see it form. Right here, you had your first breaker that formed. And why I would not have taken this trade is because stop runs are deep. They are not shallow. This, to me, is not a raid on 4-hour liquidity. Just think of it based on the time frame. This is a 4-hour swing low. I need to see a 4-hour raid. So what does that mean? I need to see a big move for me to consider that the liquidity below this low has been taken out, right? And that just comes through experience. If you want to go back test it, you'll see that it really does bring more insight into what's going on. But if not, if you did not know that, you would have entered based on this fair value gap with this breaker block. See, I'm not spending a lot of time because this is stop, right? But I still want to showcase it. So right here, you had your bullish breaker, unicorn right here, stop at this level. No matter what your take profit is, you would have gotten stopped out pretty quickly here. So let's just say you got stopped out here. Well, right after, you had the real setup form after the true manipulation. And yes, it was just after our macro reached our higher time frame objective, which again is our 4-hour external range liquidity. What gave you the insight that it was now ready to go up? Well, SMT, right? If we look at these lows right here, NASDAQ kept pulling lower while, let me just make that a little easier to see. There we go. NASDAQ kept pulling lower while, oh, I'm not showcasing the right thing. Oh, it is here. So wait, what am I showcasing? So we had SMT here, which failed. That's awesome. I didn't even realize that we failed afterwards. We still had a lot of SMT, seeing as ES was higher here and NASDAQ was all lower, right? I'm looking at all these swing points. Well, more specifically, this one, right? Where NASDAQ is lower and ES is higher. No matter how many times it's broke it, this is where I refer to higher time frame SMT, so I see less swings, right? If I look at this swing point right here, I would even go to a 1 hour here, but it would probably not even be better. Yeah, exactly. So see, just NASDAQ going lower while ES is going higher. And we could refer actually to this point in time. But since it was consolidation, you can see just by comparing both charts, we had SMT at every end. But the main thing was that now isn't that a mitigation block? Let me go check. What are you talking about? Oh, you were talking about the 1 minute gap. I think I was late on that answer. Are you talking about this? Yes, no, that is not a mitigation block because as we can see, sweep the lows to then go take out the highs. You got to remember that when you're looking at a chart with hindsight, you're seeing the aftermath. But you got to think about what I would have thought if I was there. Here I see my breaker form, a bullish range, the lows being taken out and then displacing higher. That is a bullish breaker block. If I was to look for a mitigation block, I would look for a failed order block. So I would look, for example, at this failed bullish order block that clearly did not support price, that flipped, and then this area, this zone is used for mitigation, but in this specific case, this is also a bearish breaker block. So for a mitigation block, you would look at the same, but just without a sweep of liquidity higher. For example, this is a prime example of a mitigation block. So at this point, we look to mitigate orders, and if we return to there, you can quite easily understand that we are not going higher to mitigate liquidity, to mitigate inefficiencies. We're going higher to target liquidity. Just a quick insight into order block theory there. But no, I was not talking about that one. Just order block theory can go very, very deep. I do not recommend it for most. Just for example, for my private students, I only teach them the basics of order block theory, right? How ICT goes deep into it is very useful to a trained eye, but not to a beginner. All that to say that now that we've reached our higher time frame objective and that our SMT now confirms that we are ready to go up, we can now look for an expansion higher. Whenever I'm taking a trade after, well, anytime after the 1050 to 1110 macro, pretty much, I start looking into hourly power of 3 because I do not expect lunch to be an expansion. So I'm not going to look at the second part of the 4-hour power of 3. I'm going to look specifically at the 1-hour power of 3 that starts at 11. So if we look at this open, we did, let me just mark it out. We're starting to have a lot of things here. I am going to remove the 4-hour target. You guys understand, and the 4-hour fair value gap. Another thing I need to point out is that we are inside of the reversal range, 2 to 2.5 standard deviations of our news manipulation. So that is just additional confluence at all times. I actually have a friend whose model is simply based on SMT and standard deviations. But now that we have that, what do we see? We see a move higher. Again, on ES, we formed our breaker very much earlier than we did on NASDAQ. But if you saw the SMT on the highs right here, NASDAQ going lower, we don't care about this SMT because we are anticipating higher prices. So it is okay that one is a little slower to catch up to the other. But what can I treat it? Well, I can treat NASDAQ as if it did take out that high, which means this is a breaker at this point. Oh, this looks empty. There we go. Thank you. So this candle is a breaker block starting here. Not starting when it breaks it because it already broke it on ES, which I can now treat NASDAQ as if it did. But to be more, how you would truly trade the high probability setup would be by using the strongest asset. And as we can clearly tell through SMT, ES is the strongest asset. So you would be looking to prioritize trading ES if you're looking for a long. So that is best case scenario. As I say a lot to you guys, I prefer to stick to NASDAQ just because it usually offers more risk to reward, but it does often offer lower probability setups, which you have to be dynamic with your take profits because sometimes it won't reach its true objective while ES will. In this specific case where we are stronger / weaker. If you did not know about this SMT, you also had a second possible entry, but the real entry that I would like to see from anyone is here. Now, beginner entry, right here, you'll see that our breaker block formed. We then retraced into our unicorn, and if we entered at 1123, you would have had your stop at, let's just see, fair value gap. This is one inefficiency. We have this is not a fair value gap. We have your order block right here, and this inefficiency would be your third. But this inefficiency is already rebalanced, right? We're already traded into it. So I'm going to put the stop at the swing low, expecting this liquidity to not be targeted if we are expecting higher prices. On ES, same thing. I would be entering on this gap right here after it formed the breaker, which was slightly earlier than NASDAQ would have offered at 1117. And we would be looking at a stop just at the swing low, basically, because you don't have three inefficiencies to defend your trades entering at this specific level. So you would trust that this sweep of liquidity was enough based on higher time frame SMT. So that would allow for 1.75 handle risk. Looking to the left now, you have one very clear objective, right? Which are relative equal highs. I understand that liquidity levels that are too clean will be targeted because they are a lot of stops. And that is, technically speaking, that is the easiest logic to understand. So if we look to target these relative equal highs, we see a 2.17R return, which is a very great return on there. And if we look at ES, those would equate to taking out this specific level, which we did at the same time. Well, with 1 minute difference, which to me is at the same time. So ES actually this time offered more risk to reward if you took this trade. But if you took the earliest entry and had your stop again at the swing low, you would have had 3.08. So actually ES was a better trading today. So I guess that this time ES offered actually more risk to reward than NASDAQ, which is pretty nice to see for a change. Again, I would keep looking for relatively equal high levels. And if I zoom out, by the way, when I zoom out like this, I'm doing on purpose. I don't want you guys to look at every single candle. Just look at this zone. This is very high resistance. I could frame that as consolidation. And what do I have at the high of this consolidation? Inducement of relative equal highs, right? I induced this high by going very near while not taking out the liquidity above. So this will be low resistance, and these above are relative equal highs, which were another great objective to have. And at this point, I was going to be honest, I expected us to go trade all the way here and probably consolidate to a close. But as we'll look in a second, we had a beautiful lunch trade. So you would have this trade with a final objective at 5.38R here. If we look at the equivalence on ES, we'll see that it was this high, as we did have SMT at this level. So you would have been able to target this high, which we only went to get, oh no, we went to get during lunch. Same times. Yeah, a little earlier even. So 7.71R on ES allowed, 5.38 on NASDAQ with the second entry, and with the first entry, which again was a little bit for more experienced traders, but still something you could have caught, is 6.41. So another beautiful unicorn setup once again. And right, just want to point out to you guys, closing through power of 3 opens is a clear indication of us flipping, right? Whenever I'm looking for a flip, as right here we opened, went to put up a high and then expanded to low. So right now I could frame open high low close, a bearish candle. So if I want to frame a bullish candle, I need to see the invalidation of this level through the close of a candle, then a retracement and continuation from that order block right here. So just a quick pointer on power of 3, whenever I'm looking at hourly levels, that's what I concentrate on. Now, let's clean up this and look at the third setup that the day offered. And all these 3 setups, if you had to choose one, this is the easiest one. This is the one I would want you guys to be concentrating on. 100%. So for all the beginners or new students, even people, I see you Justin in here, even if you haven't started trading yet, this is what you have to be able to notice. These are the cleanest setups and the easiest to be able to understand. I'll put back the sessions real quick so that you guys can see. I did post this one on Twitter as well, I believe. I made a little drawing, but as we can see, we had a lunch trade. After the end of the lunch session, we raided the highs to go target the lows. You're looking for one side of that range to be taken out for the other to be targeted, right? Again, every time I'm talking about one setup for life, I go back over and I speak about the thread I made. But if you don't understand these, go back to the thread. I made some statistics, probabilities about it. It is all there. And it also helps me take my time and put all these templates on while to not speak for a few seconds. So raid into displacement lower into our objective. At this specific level, we took them, but what did I just say? Stop runs are deep, not shallow. There is no SMT at this level, which tells you what? Well, I can't, both took it out, okay, sure. But NASDAQ did not really take it out, but it broke higher. So I can't frame this as SMT, indicating that the high has been put in. And it's not a stop run because it went, what is that? Not even a tick. Well, clearly a tick, but yeah, one tick above. That is not enough for me to see that as this liquidity has been taken out. So I need to see a real stop run. Even then, I don't believe we formed a bearish breaker at this level, so it's futile for me to talk to you about it because you would have waited for a bearish breaker to form if you're trading the Rice model. So no matter what, you would not have traded here, no matter your understanding of this liquidity. But after this manipulation higher, we had a move lower. If we look to the left, we can understand that all these lows will be low resistance to go through. And if we have a little drawing here telling us, oh, that was drawn the opposite way, a little premium and discount, we understand that from this point to this point, we will have very little resistance. So I'm going to take out this low, take out this low. So I have a clear low-hanging fruit right at this level. I just wanted to point that out. As we are seeing the trade after it happens, I like to talk about the objectives first and then the explanation along the way. If we head to an hourly chart very quickly, this is what I utilize to frame it the best. And I am going to remove this. I don't want to be seeing it in my 1 hour chart. Thank you. Right here, we are within an hourly inverted fair value gap. Do I regard this as a higher time frame point of interest? No. But I do use the hourly for intra-week movements, and on this specific week, I thought this could frame a small retracement to then continue higher. This is, again, I should have posted that in general, so it didn't sound so hindsighty, but I was looking for this inversion fair value gap to form some sort of retracement into lower prices before continuing higher to these relative equal highs, which is still my bias for tomorrow. This is a clear objective for some part in the week, even though we do have SMT. We'll have to wait for daily power 3 tomorrow, but definitely looking into that. If we go back to our 1 minute chart and we look at when we traded into here, we tapped into our 1 hour inversion fair value gap, higher time frame point of interest, and also, actually I should have went to the 15 minute here. I was looking at my OTE. So OTE is optimal trade entry, basically optimal retracement levels with the highest probability and the highest probability of giving you a successful trade. So if I'm trying to go short, I would try and short within these zone and more specifically at this specific level. I use this level as an algorithmic signature. So I don't look too short at this level, but when I'm looking at our intraday range, right, that's why I put up my 15-minute chart. I want to see us, for me to frame this as a retracement and then trade lower, more specifically to these lows, I need to be able to frame some sort of way for us to go down. And what is that specific way? Well, our intraday premium, we retrace to a premium of our daily range into OTE, respected OTE displacing lower. This is an algorithmic signature. This is why I do not require SMT. There was SMT with, let me just point it out to you guys, with the YM, so with the Dow Jones, and it was, we were looking at lunch right here. If you look at this swing point and this swing point, you'll see that we did have SMT, not between NASDAQ and ES, but between the Dow Jones and NASDAQ and ES, basically. So right here. I do not utilize this SMT very much because it is way lower probability than ES, but just to show you guys that yes, there is SMT present, but just the divergence from the retracement and into our higher time frame point of interest was enough for me to frame a trade lower, into our intraday draw on liquidity, our one setup for life, lunch lows. As you can see, there was no breaker formed up until this level. If I do this as the breaker block, I am going to remove the sessions now, but just understand that this raid is lunch highs and this low is lunch lows. Same thing on ES. No breaker formed on this point. I am going to also draw the one on ES. You could have framed this as a breaker if following this SMT, but I don't do that utilizing YM once again. This breaker was formed on this candle right here. And what do we have formed also on this candle? The inversion, our bearish fair value gap. On the next candle over, we retraced into it. That is our unicorn entry. And then once again, how do we determine our stop level? By utilizing 3 onside PD arrays, our 3 closest onside PD arrays, and allowing for their invalidation. So I have my entry, fair value gap. I have an order block just above, and I also have a fair value gap just above that level. So I'm going to place my stop at the high of that fair value gap level. I also have the inversion fair value gap to the left right here. So I have 4 levels defending this specific stop, allowing me for 10.25 handle stop, which to your objective was 2.46 R, to your partial, your low hanging fruit, and 4.17 to your final objective. So definitely a very good trading day, even though when we look at the big picture, it was a consolidation day, a very small range day. My goal when creating the Rise model was for versatility. It was for it to be good in any type of conditions. So definitely it is right there. And same entry happened on ES. This specific level, as you can see, ES is stronger to the upside, right? You can just see it basically from the news. If we look here, I'll just show you guys. This is our news Judas up. As you can see, ES is going higher while NASDAQ is going lower. Even at this point, it started going higher, but we are still lower to this specific level. So in that case, you would prefer to take shorts on NASDAQ, while you would have preferred earlier that morning to take longs on ES, right? So, but still, there was the same entry on ES. This candle formed this breaker block, and then the next candle retraced into it. And that was also, by the way, the 4-hour power of 3. So you had your open, which was, open right here. I am going to remove this trade. Open, expand to a high very quickly, then open the next candle over, high, expand to a low, and then we had a bunch of consolidation into highs later on during the day. So definitely, as I said, tight range day, small range day, but you did have your opportunities, and you could have taken a decent chunk of money out from the markets today. So just to tell you guys about this stop, so fair value gap, order block, inversion order block, inversion fair value gap. Wow, inversion order block. That would be a reclaimed order block, but that's not what we're talking about. And 4.5 R to that objective in just 3 minutes. So quick trades. We like them quick. We like when they go right away where they're supposed to go, and then we can just get fully in and out of the markets in 3 minutes and cover our expenses, right? That's why we do it. Do we have any questions? I know we went over 3 different setups with some more complicated explanations, but I don't mind spending a little more time tonight. If you guys have any questions at all, just type them in chat at the moment. Gonna give you guys a sec, but I am not seeing anything. Oh, someone is typing. All right. Well, if there are no questions, we're gonna end it here. Yeah, you're right, Pervy. It was in the general, but he did not come to the price action review. I told him to come in here. But anyways, we did talk a lot about Power 3 in the beginning, so that way I can tell him to go watch the recording and he can understand what he needs to. Don't worry, that was all in my head. I remembered that. Yes, sir. Perfect indeed. On that note, guys, we're gonna call it a night. tomorrow is a no trading day. We have a bank holiday, so you guys just take it easy, right? Definitely, those are the types of days where if you can rack up a few hours of backtesting, keep you sharp, you'll definitely feel good going into the next day. But if not, we will see each other on Friday night for price action review. So see you guys. Have a good night.